In the meantime, we are joined right now in the newsroom by Josh Levin. He is with Citigroup. He is taking a look at some of the home builders in this environment. And Josh, you say they are ripe for consolidation. Let's just go right off the bat. Who could be bought and who is in a position to make any bids? So the likelihood of consolidation has increased. I think in terms of potential targets, you have Beazer, you have Ryland, and you have Meritage. In terms of potential acquirers, you have D.R. Horton, you have KB, MDC, and less likely would be Pulte. So what makes these potential acquirers strong enough to be able to absorb, let's just say, more inventory, which seems to be a problem for everybody? Well, it's not about inventory as much as it's about the fact that you need size and scale. To be profitable in this industry, if you look at the publicly traded home builders, the larger builders are by far the ones who are better positioned for profitability. So you want to be able to have size and scale to leverage your SG&A. Now, one thing people don't realize is many of the public builders, their balance sheets are in great shape. They have a tremendous amount of cash, and you can always issue equity to do deal as well.
Now, looking at the circuitry of reporting this week, you have existing home sales to more new homes the day after and then toll reporting. How bad can that existing home sales number be relative to expectations?
I think investors may not realize just how bad the existing home sales data tomorrow will be. If you look at the Bloomberg terminal, it says the consensus forecast is around 4.6, 4.7 million. I think it will come in at 4.1 million. And tomorrow morning on the set, you're going to be having a lot of discussions about all-time lows in existing home sales, what public policy initiatives we need to take. I think that will be the headline of the day tomorrow.
So a new low for existing home sales, I agree. I think it's going to be a bomb. But if you look at the new home sales number, we've already hit the lows. The question on that is how long can we stay at this 300,000 type level for new home sales?
Right. So the bottom is probably in on new home sales. You know, the question becomes, the question you have to answer is, when does consumer confidence pick up? When does job growth pick up? Absent those factors picking up, I think you'll see seasonality at play. So what will happen is coming into the Super Bowl, that's when the spring selling season typically starts.
Are you looking at unemployment, though, in relation to this? I mean, in theory, if you don't have a job, you're not going to buy a new house. You're not going to buy a vacation house. I mean, mortgage rates are at pretty much an all-time low, at least a 30-year low. Does this show just how desperate the situation is?
Sure, it does. I mean, the fact that new home sales are close to 300,000, which is the lowest level on record, and the population is 310 million people, yes, it tells you that we have a problem. And it's consumer confidence as well as employment. So even if you have a job, do you really feel compelled to go out and buy a home tomorrow? Do you think prices are going to go up? Do you think mortgage rates are going to go up? I don't think most people are worried about that happening.
To what extent, Josh, are you following the X factor and whatever size it may be in your mind as far as foreclosures go? There's a lot of people out there who say we haven't even begun to see. They say it's like an iceberg. We've seen 10%.
So the truth is there are a tremendous number of excess homes in the country. That's what makes this housing cycle different than previous cycles. The fact that we have so many excess homes. That's a problem. That's a structural problem. Only the passage of time can really address that. So absolutely, we're paying attention to it.
All right, Josh, thanks very much. Josh Levin joining us there from Citigroup Global Markets.